Hi, good evening, traders. Tonight we are on the 31st of March 2022. This is a Thursday evening, 22 minutes past 6 p.m. And we had the closure of the month of March, the financial year, and of course, the expiry of the derivatives contract for the month of March. But uh, in terms of price, it was not that much of an event. In fact, we are looking here at the daily chart of the Nifty futures, and we can see that it was a minor negative close by just 51 points, 0.29% down, almost staying within the range of yesterday. We can see that over the last 2 days, the index is essentially just gone dull. That's not much of a great news because just recently, just yesterday, it broke beyond this consolidation. So when we see breakouts out of consolidations, range bound price activity, we would always like to see follow through movements on the upside, which is clearly lacking here. So is this going to turn into a fake breakout? Will it slip down? Let's see, probably a couple of days trade and we will get some clarity for this question. But in terms of the structure of this movement, the uptrend is intact. None of the technical indicators are suggesting any kind of weakness per se or any kind of top out per se. But it's going to give us a move. It's very likely to give us a day over 100, 150, 200 points kind of a move. It's pending now. Considering the trend and the momentum, we can expect that this move is very likely to come on the upside rather than on the downside. That's because primarily I'm going with the trend. In my experience, I've always seen that staying with the trend most of the time plays out rather than going contrarian. Now, yesterday I spoke about Bank Nifty. I spoke about the importance of Bank Nifty, how it should participate for the index to rally further up. Now, apart from a strongish opening, it didn't do much. In fact, this was more like a freak trade at today's high for the Bank Nifty future, which was around 36,899. And so it stayed range bound. We need to discount this opening high. And what we had for the rest of the day is more like a consolidation. If you recall, I spoke about State Bank of India yesterday, and that stock, all right, and that stock continues to stay as an important one, even for tomorrow, because I feel that this particular consolidation of the stock should offer us a breakout on the upside. The contraction is very, very evident. We got inside bars one after the other, and keep a close look at the psychological 500 mark. If this happens, then definitely it will boost the Bank Nifty or for some further upside. And this entire possibility can completely negate once it breaks below 485. I think as long as 485, 487, the cash market holds, the chance of a movement further on the upside, a further move up here, I'm considering this as a consolidation, and ideally this should lead to further breakout. So let's see, SBI continues to be an important stock, Bank Nifty continues to be an important sector. If our Nifty has to sustain above this recent nascent breakout that it gave us yesterday, and will it have the legs to move all the way towards that 18K mark? I still feel it's possible, though there are few stocks which are tired, like Reliance Industries had a great run, so it is definitely going to tire down now. So if Reliance and the other stocks which gave a move are likely to slow down, then the sectoral rotation has to happen from somewhere else, and that's why I'm betting on the banks and hope that the private sector banks, the PSU banks, amongst the PSU, especially State Bank, performs from here on. Or else for the Nifty, it might turn out to be a little difficult to sustain at these highs. But as long as the trend is intact, we should continue the short-term bullish bias. And State Bank is an important stock that I'm eyeing for tomorrow. And as long as 485, 487 holds, I'll be hopeful for a breakout above the psychological 500 mark. I hope this financial year was a really good one for you, was definitely profitable for you. You've been trading well. Take care of yourselves, trade well, and trade wise.